Imagine a city, houses, stores, schools, roads. Now imagine none of that exists, just dirt. Someone has to pay so that dirt turns into a city. That's where banks show up. Banks are like the city's tool shed. Need to build a house? Tool shed. Need to start a business? Tool shed. Need to buy a flying Batmobile? Okay, that one's expensive, but same idea. There are thousands of banks in the world. Some are tiny. One building, 3 employees, one coffee machine that barely works. Others are huge. So huge they control more money than entire countries. That's like one kid having more candy than the whole school. That kid is dangerous. Long ago, banks didn't exist. People used coins, gold coins, silver coins, enough metal in your pockets to announce your arrival before you spoke. Every city had different coins. Imagine going to 5 stores and each one says, "Sorry, we only take blue coins." That was normal. It was chaos. So merchant said, "Okay, this is stupid." They all met in one place. They sat on benches, they traded money, and started taking notes. Those benches became banks. That's it. No lasers, no explosions, just benches. Now here's the problem. Carrying money was dangerous. Someone could steal it, you could lose it, or someone could hand you fake coins and laugh while walking away. So people asked, what if someone safer held my money? Boom. Banking unlocked. Banks kept money safe, but they noticed something. Most of the money just sat there, not moving, not building anything. It was bored. So banks said, what if we lend this money? Here's how banks work. Super simple. You give the bank money. The bank says, thanks, I'll keep it safe. But secretly, they lend some of it to someone else. Not all of it, just enough. That person uses the money to buy a house, start a shop, build something useful. Later, they pay the bank back, plus a little extra. That extra is called interest. That's how banks buy coffee. Now here's the risky part. Not everyone pays back. Some people mess up. Some businesses fail. Some people buy things they shouldn't. The bank knows this. That's why banking is about guessing risk. Good banks guess carefully. Bad banks work with the joker. When banks guess well, cities grow. More houses, more jobs, more cool stuff. Money breaks out of the vault and the night gets loud. But sometimes banks get greedy. They stop being careful. They want fast money, big bonuses, fancy offices, ridiculous chairs. They lend money without checking properly. That's like giving car keys to someone who can't reach the pedals. Then, boom, too many loans fail. People can't pay back. Houses lose value. Banks panic. Everyone panics. It's like dominoes. People lose jobs, people lose homes, people lose trust, not because everyone was evil, but because the system was careless. So the government decides to step in, not because banks are heroes, but because if banks fall, everything else falls too. Stores, businesses, cities. New rules are made. Banks are told, be safer, keep extra money, don't do dumb stuff again. Some banks listened. Some banks pretended to listen. Classic. After that, people tried new ideas. What if banks weren't owned by rich strangers? What if regular people owned them? That's a credit union. Members own it. Members control it. Less flashy, less risky, less breaking stuff. Then the internet showed up, and the internet hates middlemen. People started funding ideas together, lots of small helpers, sharing risk. If something failed, no one cried too hard. Games were made, companies were started, ideas became real, all without big banks saying no. At the smallest level, something amazing happened. Tiny loans, really tiny. Enough to buy tools, enough to sell food, enough to start over. That's microlending. Small money, big change. Most of the money you think doesn't exist. Over 90% of it is just numbers in banks' computers. If everyone tried to grab their cash at once, the city would find out real fast what money actually is.
Did you know? For hundreds of years, banks weren't allowed to charge interest at all. It was literally illegal in much of Europe. Charging interest was called usury and considered a moral crime. So bankers had to invent loopholes, fees, and creative math just to survive. Modern banking was basically built by people trying to bend that rule without breaking it.
So what's the lesson? Banks aren't villains. Banks aren't heroes. Banks are tools. A hammer can build a house. A hammer can break a window. Depends who's holding it. And that's banking. Quiet enough to ignore, strong enough to move Gotham.
Riddle time! What's more dangerous for a city? A greedy bank or a careless bank? Which causes bigger damage and why? Leave in the comment and I'll pin the best answer.
Thanks for watching. If you enjoyed this learning lesson with Robin, leave a like and subscribe, and I'll catch you guys later.